You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast coming to you from Montecito, California. Before we begin, just a reminder, there is a website associated with this podcast. It's wealthformula.com. Lots of resources there, things to download, things to read, things to join, all sorts of stuff. So check it out, wealthformula.com. Let's talk about today about online businesses. And I'll start by telling you a story. The story is probably something that a lot of you have heard, that after finishing residency, I did something which I call swallowing the purple pill, which was reading a Robert Kiyosaki book. And in my case, that was the Cash Flow Quadrant. If you haven't read it, by the way, I think it's a useful piece. It certainly was enough to inspire me to find my own entrepreneurial self for the first time. And I was like a kid in a candy store looking for any business opportunity I could think of at that point. And I will say that my initial foray into the entrepreneurial world, in a way, didn't feel too entrepreneurial because as a surgeon, I'd started up medical businesses. Now, I say businesses here to make the distinction that these were not run like practices per se. They involved branding, heavy marketing budgets, and cash pay. And unlike many entrepreneurs, I was fortunate. My first few businesses were successful. They were successful for years. However, at times, there is no doubt I felt tremendous amounts of stress mostly because of the overhead involved in brick and mortar business operations like that. And anyone who runs a business knows that there's lots of bills to be paid, regardless of whether or not your business makes money. You got payroll, you got advertising, you got insurance, you got to pay rent, whatever. It all adds up. And my fixed costs for my initial business in Chicago, they were running about $200,000 per month. And those are fixed costs before any money came in. And the costs went up, obviously, as we did cases because there was certainly commissions to pay. There was supplies that were used and all that kind of stuff, right? So net, if we didn't make at least, $300,000 in revenue per month, there was actually not really much profit left over for me. So certain months I felt super rich, and other months I felt like afraid that I was going to go completely broke. And that is not a healthy way to live. And you know what, though? Those initial brick and mortar businesses, they're gone now. And, it's like I don't look at them negatively. They gave me a start. They made me some money over the years. But as often is the case with small startup businesses, they don't last forever, right? So what did I learn from them? Well, as you can imagine, I learned a lot. I learned that I prefer boring businesses to flashy ones because they tend to have less competition. I learned that you must have competent and reliable management because that if you don't, you're going to get yourself in trouble. And also can't be too concentrated in the hands of one person. And I learned to avoid businesses with significant fixed expenses, again, because I don't like that feeling. Now, avoiding significant overhead is perhaps my biggest lesson, right? It's really quite awful starting off every month so far in the hole, but how do you avoid that? Well, one consideration is something called an online business, a business that's completely based in the internet. They can be as boring as you want. You can sell widgets online. They can be automated to a certain degree, making management and employees less critical. And in many cases, they are pretty minimal in fixed costs. Pretty much a lot of times you're just basically, just paying for advertising. So I've always been curious about buying an online business. And for that reason, I have invited a representative from one of the largest online business brokers in the world to talk about this type of asset. Now, this is an interview where you will learn a lot, and I highly recommend tuning into it. However, you got to be careful with this stuff. First of all, internet businesses are not for the faint-hearted. You got to know a little bit about them, or you got to learn about them, or you got to know someone who knows about them. And just to be clear, and this is really important, I've never done business with this company, nor am I endorsing them. I have no financial relationship with them either. So please do your own due diligence. If the spirit moves you, contact them, but don't blame me if things go badly, right? I'm just here for financial education. And that's what we're going to do when we come back from these messages. Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is Justin Cook. He's a co-founder and CMO of Empire Flippers. It's the world's leading marketplace for buying and selling established and profitable online businesses. He also launched WebStreet, which makes online businesses a more accessible asset class by enabling individual investors to passively own internet businesses like content, FBA, SaaS sites, whatever that is. I'm not even sure what that is. And with his 10 years of experience in online industry, Justin's assisted many investors finding online companies that would yield the best return, and hundreds of online entrepreneurs obtaining the highest sale price when actually exiting their companies. Justin, welcome to the show.
Thanks for having me on, Buck. Appreciate it.
So, you guys reached out, and I thought it was kind of an interesting concept. We talk a lot about investing in various types of assets, and websites are certainly an asset. But how would you describe buying a website and what that entails, and what exactly are you buying?
Yeah. So when someone's looking to purchase any type of business, whether it's online or offline, typically they're going to, if it's a smaller business, they're going to step into the business and probably run it themselves. If it's a larger business, it generally comes with like a team of people, maybe even a CEO or someone, general manager, someone that's running that business. So at Empire Flippers, we focus specifically on internet businesses or internet websites, right? So, and there was a gap in the market 14 years ago when we started Empire Flippers. If you want to sell your online business, you go to your local brokerage. So if you're in Tulsa, Oklahoma, or Sacramento, California, or Montecito, or wherever you are, you're going to have to go to your local business broker and say, I want to sell this internet company. And they're going to have buyers locally, right? So I'm selling my e-commerce business to someone else that's living in Tulsa. That doesn't make a lot of sense. So we created Empire Flippers to reach a worldwide audience, people that can buy and run this internet company from anywhere, which really opens up your buying pool. So where like a local broker might have, a couple hundred people they can sell your business to, we have hundreds of thousands of people looking for online businesses they can purchase and run from anywhere.
Mm-hmm. How would you characterize buying an online business as a different animal from, say, buying brick and mortar?
Yeah, so there's a bunch of different things. So with a brick and mortar business, typically a lot of the value is tied up in real estate, equipment, whereas an online business, it's much more not that, right? It's ones and zeros, it's data, it is traffic that you're getting to the site. And so it's really much harder to get loans, financing for online businesses than it is for offline or brick and mortars. So a lot of times you're dealing with things like seller financing and negotiations with the seller in terms of like what you can do and how much money you're going to be putting into the deal. It's often, particularly under $1 million, it's all cash or mostly cash with a bit of seller financing. Over $1 million, typically you'll have like an operator investor combo. So you have someone that, an operator that comes in that has successfully run online businesses in the past. And they've got 1, 2, or 3 investors backing them, and they have their own deal worked out. So the operator will essentially take over the business once it's purchased, and the investors are in a more passive scenario.
Yeah. So let's just say that I am, a newbie at this, and I'm very interested, and I come to you and I say, Justin, I'm really interested in looking at one of these businesses. Where do I start?
Yeah, that's a great question, and it was a problem we were dealing with at Empire Flippers. So typically at Empire Flippers, and this has been going on 14 years, someone will come in and they've already got experience at running an online business.
Sure.
So they know how to set up a domain, hosting, they know how to monetize, build traffic to the business. And that's our kind of bread and butter customer, someone that has that experience. So a lot of our deals at Empire Flippers are done with sellers who run an online business and buyers who have experience running an online business.
So they already know what they're doing.
They know what they're doing. So it's a kind of a niche community in that, our buyer pool at Empire Flippers is limited to people that have experience previously at running an online business, right? If they're trying to step in brand new and say, look, I've got the money. Let's say you're a mid-level executive at some company. You're like, I don't want to do this anymore. I hate the cubicle or the travel every week. I want to like run my website from Bali.
Or you're just trying to diversify, right? Portfolio stuff, right? So
yeah. So let's say you want to do that and you come in and you have no experience. You say, but I'm willing to learn. Well, at Empire Flippers, 4 or 5 years ago, we said, well, go figure it out. right? Go find here's some websites.
We're not here to teach you, all right? So that kind of thing, right?
Yeah. So we found ourselves like turning away all this money because we were like, look, we're not in the business of training people how to run online businesses. We're kind of like at the tail end of that kind of stuff. So like we don't have teaching course or anything. We're not doing any of that. We just buy and sell, help people buy and sell internet companies. So we kept turning money away, and we were like, look, this is kind of a high quality problem for us to solve. Like this is probably bad for us. We could do better than that. So we tried to figure out, we looked for a way we could make it to where we could make this a more passive investment. I bring up my aunt as a great example of this, who has no experience running an online business, but she wanted exposure to it. She understands that internet companies are growing. It's a wave of new businesses that are being started by Gen X, by millennials that are doing quite well. And she wanted to do it. And I was like, sorry, Aunt, I'm not gonna say her name, but sorry, Aunt, there's nothing for you here. So that's why we created, Empire Flippers is our main business brokerage. We created a company called WebStreet. And the purpose of this is we said, look, what if we could find a way to pair passive investors with all of these successful operators that we already have in our stable, right? So we've done thousands of deals. And so there's a buyer and a seller on both sides. Of those thousands of deals we've done, some of them have been very successful in either purchase or building up the business that they sold. So they've got a track record of success, right? Where they've done quite well with these internet businesses. What if we could pair these operators up with passive investors? We could have the operators leverage up. So they put a little bit of money in the game. The investors provide the bulk of that money, and then they invest in that operator to find a business to purchase. So it's the way I describe it is it's like, the track, right? As an investor, you're investing in the jockey who then goes and picks the horse. So you're not investing in the horse, you're investing in the jockey and their track record, and they go out and find the best horse to invest in and to do business with.
Where is this like sort of pool of operators coming from?
Yeah, so that's kind of our secret sauce. Not the secret I can't tell you, but a secret in that at Empire Flippers, we've been doing this for 14 years. And so we've had a bunch of people buy and sell businesses. We've done now just under $500 million in total transactions, 496 million, I think, today. So we have a lot of people that have bought and sold these businesses over time. So we've got over time, you build up a customer base. And this huge customer base is kind of who we pull from to get the operators. So they're actually separate companies. There's Empire Flippers and there's WebStreet. But WebStreet started with that stable of horses or stable of jockeys, I guess you could say, that they can pull from an email to. And then they put them through a vetting process. So WebStreet will reach out and say, hey, we have another round of operators we're looking for. They'll get 15 to 20 applications. And we do this right now per quarter, 15 to 20 applications, and they'll whittle it down to 3 to 5 operators that are going to be part of the next fund.
Okay. So again, I'm just trying to make this concrete for people. You go to say WebStreet and you say, hey, I'm really interested in this. You get to maybe interview a few operators, see who you click with or something like that. And then you're basically mostly the money. The other person maybe puts a little bit of money, and then you have some sort of sweat equity split with that person. Maybe it's 50-50 or whatever. Is that pretty typical, sort of a 50-50 split at that point?
So it used to be that an investor would go and we would have a fund, right? And we'd have anywhere between 3 to 5 operators.
Mm-hmm.
An investor could pick and choose the operator they wanted to work with. That's no longer the case. Now it's a fund in total. So say, for example, we're doing a $6 million fund. We've got 4 operators, right? So on average, make the math easy. It's, let's say 1.5 million per operator for a $6 million fund. When you invest in the fund, you're investing in that in all of the operators across the board. So
in multiple businesses.
Of 4 operators, yeah. And so operators.
So now you've got like a fund of businesses, basically, right? I mean, it's essentially like a private equity model of businesses.
Micro private equity. Yeah. And so the operators will have a particular strategy. So one operator in there may be going after Amazon, Fulfillment by Amazon, which are e-commerce businesses that are sold through the Amazon platform. Another one might be a SaaS or software as a service business. They have a particular experience with SaaS companies. And so they're looking for a $1.2, $1.5 million SaaS business. Another one might be content sites that use display advertising to make money. So we'll typically put a cohort of businesses together under a particular fund. Now, you said 50-50. It's not 50-50. The split is 5% equity invested from the operator themselves. So they're putting, they have skin in the game. And then 95% from the investors. The split works out to be 20% for the operator, um, 67% go to the investors, 10% goes to Web Street, and
Right.
we reserve 3% for buying advisors. And what these do is these are people that work as buy side
hmm
advisors to the operators that are looking to buy the businesses, and then they will help them and negotiate the deal and find deals. And that kind of thing.
So, I mean, this is basically a full out fund model. So, presumably, you're limited to accredited investors,
That's right.
and you're
Accredited
doing Reg
investors.
D 506Cs, that
I'm
kind of
not sure.
thing.
You have to talk to Mike exactly,
Okay.
but I think so. We can't advertise any of the deals.
Yeah.
But
So it's
we can talk
Regulation
about
D
it.
506B probably. So you have to get onboarded and so on and so forth. And just to
That's
be
right.
clear to listeners, I am completely learning. I have nothing to do with Empire Flippers. I don't know. I'm just completely in the same boat as you. I am not paid by Empire Flippers in any sort of way. No connection with them. I'm just curious. Okay, so let's kind of finish out on that whole fun thing first, which is how long has that been going on, the Web Street thing? Have you done a few rounds of that or?
Yeah, 3 to 4 years we're doing it now. We're currently in our eighth round. We don't have full returns yet because we haven't exited the businesses. So right now
Mhm.
we're delivering. And by the way, it's a very cash flow focused investment. So like, I don't know if you're familiar with Masterworks at all. So Masterworks it's an interesting company. You should take a look, but they basically they do a similar thing, but they do it for art. A
How do you cash
mosaic
flow on
or
art though?
you don't. Well,
Right,
that's
right,
the
right,
thing. So
right.
part of our model is based on there's real estate model like realty shares and Fundrise, and then there's Masterworks, which is on the art side. The art side has no cash flow, right? You're banking on appreciation on the art, right? Whereas like our model is more similar to the real estate model, where it's based on distributions and cash flow. So we're cash flowing the businesses right now. On average, we're delivering somewhere between a 2 to 3% return per quarter,
hmm
which works out to just around 11% per year.
Probably not a lot of tax advantages there.
Not a lot of tax
Yeah.
advantages because of the cash flow.
Yeah,
But
sure.
yeah.
In businesses like this, obviously, there's got to be its own set of risks. Can you talk a little bit about those? I mean, I right off the bat, I'm thinking, search engine optimization, algorithm changes, and any number of things that can go wrong with traffic alone.
In any type of business you're dealing with, offline or online, it's going to have some risk. Online has unique risks,
hmm
and that's often very platform dependent, right? So depending on where you're getting the traffic from, maybe it's a social media strategy and you use TikTok, maybe you use paid ads on Facebook, maybe you're an organic search through Google, right? All of those have gone through the rigmarole. They've all had issues, they've all had their ups and downs. So right now, I think Google's a bit of a struggle. So I don't know if you've Googled things recently, but their SERPs are a mess. I mean, you're getting Reddit and
Yeah,
Quora links that you don't
it's
need.
crazy.
You're
Yeah.
you're getting snippets that they're stealing content from other providers and putting it in the search results via AI. So it's a bit of a mess right now. So content or search-based sites are struggling right now. But then on the other side, you have like direct-to-consumer e-commerce businesses that are doing
Amazon,
well.
right? Amazon sites.
So Amazon has done well. Service-based businesses are doing well. SaaS, software as a service businesses are doing quite well. So you have ups and downs in different industries. We're really agnostic as to the monetization type or the platform. There's different platform risks, but we try to diversify across all platforms and across different monetizations so we can provide returns, right? That's ideal for us. But yeah, I mean, sometimes certain sites or certain businesses are struggling more than others, and some are doing much better.
Yeah, content sites especially. Who knows what's going to happen, right? And all of a sudden you've got like, perplexity and different things that certainly could. I mean, it's hard to imagine overturning Google, but I mean, people thought the same thing, years ago before Google. So
OpenAI's taking a stab at it, right?
yeah,
I
yeah,
tell you, we go to a lot of the like SEO conferences. Like we're kind of connected to the SEO community, and yeah, it's funny. Our director of marketing was just at one in Saigon, Vietnam, and yeah, just a lot of fear. He's at one in Chiang Mai last year, Thailand, and there's a lot of affiliate site guys going, man, I'm getting destroyed by Google right now.
yeah.
And there's a very few that have done quite well. They've done actually better, but a lot of them have different strategies. So they're not just reliant on Google organic search, and they've also built up an email list. So the people creating kind of like niche sites that just rely on organic traffic is a bit painful. And so that's why we talk to a lot of the entrepreneurs we meet that have content-based sites. We're like, look, you should be building an email list. You
Yeah.
need a distribution list, and you need to build your business into more than a niche site. You want to build a brand that people
Right.
care about.
Right.
That's what's really important right now.
Yeah. Let's go back to individual sites. There are scenarios I can see where you might want an individual site and learn how to use it and that kind of thing. When you look at individual sites, what kind of multiples do these things sell at? In part, like, so I'm thinking, say maybe, I can see a situation where you have a certain kind of business in an industry, like say it's a financial industry or something like that, and you're just trying to drive, more content and capture emails and things like that. But you also, you also want to make sure you're cash flow positive on that kind of site. Does it depend on how big the site is? How, what determines the multiples on these things? And is there sort of a typical sort of times earnings per year that these things go for?
Yeah, I mean, there's lots of different ways you can value businesses. And ultimately, in the end, I'll put this caveat out there. A business is only worth what someone's willing to pay for it.
Right.
So you can create whatever kind of like formula you like. And if the seller's, not willing to sell it at that price, or the buyer's not willing to buy it, you're not going to get a deal. And so it's not worth what you think it is, or the buyer thinks it is. So that's true across the board. Now, the facts are, multiples change and they vary over time. So I'd say on average, multiples were a bit higher in 2020, 2021, when the market was hot. It was
Right.
a seller's market for sure. We'd have, 5, 6 buyers competing for a deal. We put a deal up, and this is like somewhere between $500,000, $2 million listing, and we'd have 5 or 6 offers on it within a week or 2 weeks. It'd be sold within a month, right? So quick turnaround, and they would drive multiples up. Markets changed since, I'd say, in mid 2022. So it's turned into more of a buyer market. So buyers are much more specific and savvy in the businesses they're purchasing. So on average, multiples have come down. I'd say for the best businesses, for the top 20%, the high quality businesses, multiples have held. Slightly less buyers, but multiples have held. But on average, they've gone down. So what does that mean? There's a wide range. They can sell anywhere from 2 to 5 times earnings, or 2 to 5 times EBITDA. That's typical. What determines that multiple? It's various. So the longer it's been around is helpful for multiple. If you have recurring revenue, that's helpful. If you are diversified, that's helpful. It's basically a measurement of risk. A higher risk business is going to sell closer to the 2 times earnings, and a lower risk business is going to sell closer to the 5 times earnings.
Yeah.
Now, that's, often that's going to be negotiated between the buyer and seller. But we do have, based on the thousands of deals we've done, we have a valuation tool on our site at empireflippers.com. You can put in your business or put in some information, even fake information, and get a sense on like what a business would be valued at. And we use that front end like as a marketing tool, right? So people go there, they fill out their information. We're like, hey, would you like to sell your business?
Yeah.
But we also use that on the back end to actually value the businesses and get the businesses listed. So that's the pricing mechanism we use.
To what degree do you guys get involved in making sure that these businesses are real, they're legit, that they're not, big fake things that people are just going to get conned on? Or do you kind of leave that up to people to do their own due diligence and just be the middleman?
Yeah, so we have a vetted marketplace, which means we review all of the businesses, we review revenue, we review traffic, we review the seller. So we do KYC on all the sellers. There's no anonymous sellers listed on our platform. So we do all of that research. Now, we don't have to. If we stated, hey, we don't do that, we let anyone list anything, that's a business model, right? But you'd have to search a lot harder to get to that, needle in the haystack. Our thought is if we can like limit, the difficulty of your diligence, and limit your search to, we know that the earnings in these businesses are legitimate, the sellers are real people that have been verified, you have a much better chance at finding the right business for you. We don't want you to have to like sort through scams to get to the non-scammy businesses.
Right.
We'd rather have all of them not be scams, but some of them may not be the right fit. They're too small, earnings are declining, it's not the right niche, like those kinds of things. And you just have to find the right business for you. So we do a lot of vetting intentionally. We've done that since the beginning.
What do you think your success rate is? I mean, I know that's hard to say, but like you're gonna, not everybody who's gonna buy a site's gonna win, right? You're going to have some people who buy a site and it's going to be a big, it's going to lose.
Yeah, for sure. That definitely happens. What's interesting is part of the reasons people sell, it's diverse. In some cases, it's negative stuff. They're going through divorce.
Yeah.
They have business partner issues, which are fun ones, I can tell you.
Yeah.
But in some cases, in a lot of cases, it's where the seller feels like this business has been maxed out in value, right?
Yeah.
So they've got it up to making $30,000, $40,000 a month. They're selling it for $1.2, $1.5 million. And they're like, this is as big as this business can get. I'm not going to grow it any bigger. So I might as well sell it now and kind of leave it to the next person.
Yeah.
Right. So that's the seller's perspective. And then the buyer's perspective is like, I'm not getting out of bed for anything smaller than $1 million. That's just too startup for me. Right. It's too small.
Right.
They've really built this on the back of organic search, but I'm a paid traffic expert, and this is a great opportunity for that. And they've kind of missed the boat on the paid traffic approach. And so they're like, this seller is leaving money on the table. And so there's this disconnect between what the seller thinks is going to happen,
Sure.
what the buyer thinks is going to happen. That's one of the reasons why we're needed. Now, in some cases, right, the buyer's right. And they're like, yeah, seller left money on the table. And there are instances where we have sellers that go, that have the seller's remorse, where they sell the business and they're like, God, man, they were right. I did leave money on the table. So in some cases, they'll retain equity. So sellers can retain 10, 20% as kind of a kicker. It's a second bite at the apple. And so we have that happen sometimes. Sometimes they sell it outright. Sometimes the buyer's wrong and they think their approach can work. I'm a paid traffic expert. I think I do paid traffic on this. What they don't realize is that niche is, particularly difficult for paid traffic or too competitive or whatever, and they're not able to do that profitably. So the business isn't able to grow the way they want to grow it. So it really depends is the answer. But there's definitely a disconnect. Often the seller thinks, this is a good deal for me. The buyer thinks it's a good deal for me. Sometimes the buyer's right. Sometimes the buyer's wrong.
Well, good. Sounds really interesting. And it's obviously one of those things where you want to be like sort of buyer beware. This is not probably something for the faint-hearted to go and do and just blindly do. But if it is of interest to people to look into further, it's Empire Flippers is, how do you get a hold of you guys and for each one of these businesses?
Yeah, you just go to empireflippers.com, send us a message. We list all the businesses on Empire Flippers very publicly, so you can go and review the information. If you want the details, the financials behind it, you have to sign up because we got to KYC you on the buy side as well. To get the details, you'll need that. On the WebStreet stuff, none of the things are listed publicly. You're going to have to be verified as an accredited
Right. Fantastic. And is that webstreet.com or what is that?
Webstreet.co.
Got it. Well, great. Interesting information. Thanks for being on the show, Justin. And, we'll maybe have you hunt in the future and see if we get some stories from some of our investors and see how things went.
Cool, Buck. Thanks, man. Appreciate it.
We'll be right back. Welcome back to the show, everyone. Hope you enjoyed it. And again, if you are interested in this kind of thing, go check it out for yourself. It is a very interesting world, and I think there's different angles to it as well. I mean, if you're super savvy in actually building websites from scratch, this could be a gold mine for you if you can just figure out how to build sites that people want to buy. And that may just mean, sites that have a lot of traffic or sites that can make a little bit of money. So anyway, lots of opportunity. There's lots of ways to make money and obviously potentially lose it as well. So do it at your own risk, but hope you learned something. And that's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.